Layoffs are everywhere, and almost every week we see companies cutting jobs. But what if I told you AI is not a main reason behind it? Yes, people believe that AI is replacing jobs, which is true, and that's why layoffs are happening. But when you actually step back and look at the data, AI is just a small part of the story. The real reasons are much deeper and they're connected to how companies have been operating over the last few years, especially how they have been managing money, growth, and expectations. So, in this video, instead of just repeating common assumptions, we are going to break down using data, logic, and understand what is actually driving layoffs. And more importantly, what you can do about it. So, stay tuned and let's get started. Now, before we even try to understand the reasons, it's very important to first understand the scale of layoffs which are happening right now. If you look at the platforms like layoffs.fi or TrueUp, which I'm pulling out right now, which actually tracks job cuts across companies globally, the numbers are not at all small. We are here talking about hundreds of companies and 10,000s of employees being laid off. Recently, if you can see in March 2026, 30,000 of Oracle employees were laid off. And as per the records, in India, 12,000 people were laid off, which approximately counts to 40% of Oracle's Indian workforce. So the impact is really huge. And this is not just limited to one type of company. While tech has been hit the hardest, layoffs are happening across industries, from startups to large enterprises. That's very important signal. Because when layoffs are spread across industries, it usually means this is not a company specific issue. It's not about one bad decision or one failing business. It's a broad system level shift. Something fundamental in the economy has changed, and companies across the board are reacting to it. Now let's address the biggest misconception, AI. Yes, AI is growing fast and yes, it's impacting couple of jobs. But if AI was a primary reason behind layoff, we would see layoff concentrated in specific roles like content generation, basic coding or customer support or even basic repetitive tasks. But that's not what is happening, right? Entire teams are being laid off, entire departments are being restructured, even roles that are not directly replaceable by AI are being cut. This tells us something very important that AI is not a root cause. It might be a contributing factor, but it's not a driver. So if AI is not the main reason, then what it is? Now, just as the world was recovering from COVID, Russia-Ukraine war just hit the global supply chains. Energy and food supplies were disrupted, pushing fuel and food prices even higher and driving inflation sharply up. But this is not just about the past. Even situation continues at this today as well. Ongoing geopolitical tensions, including those for US and Iran, are adding constant uncertainties to the global markets. Even the possibility of disruption in oil supply is enough to push prices higher. And that uncertainty is what makes the situation more serious because market just not react to the events but also to the risk which comes along with it. Now, when the inflation rises, central banks are forced to respond by increasing interest rates to control it. And this is where these things start to change for companies. Higher interest rates means money becomes expensive, borrowing becomes difficult, and funding slows down. Companies that were once focused on growth suddenly have a focused on survival. Cost needs to be controlled, spending needs to be reduced, and efficiency becomes the topmost priority. So layoffs are not just internal business decisions, they are a ripple effect of a global instability, economic pressure, and a system that is becoming tighter and more uncertain day by day. Well, now comes the most important part of the entire story is money. During the COVID period, interest rates were very low. This meant companies could borrow money easily and investors were willing to fund aggressively. In simple terms, money was cheap. Because of this, companies didn't worry much about the profitability. They focused on growth, expanding fast, capturing market share, and scaling their operations. But then, as inflation increased globally, central banks started raising interest rates, and this changed everything. Suddenly, borrowing became expensive, funding slowed down, investors became cautious, and companies were no longer rewarding for just for growth. They were expected to show profits. This shift forced companies to rethink their entire cost structure. And when companies look to cut costs, the biggest expense was always people. So layoffs started becoming a financial decision, not a technological one. Now, to understand this, we need to go back to the COVID period. During that time, there was a massive surge in digital demand. People were working from home, shopping online, consuming digital content, and heavily relying on tech platforms. This argument, I just quick got to UN Trade and Development website. Now, if you just scroll down over here and now look at this UN trade and development data. We can clearly see a sharp spike in online shopping across major countries starting from 2019 to early 2020. Now this indicates a sudden and significant shift in consumer behavior towards online purchasing during COVID period. Now companies literally saw this as a growth and assumed that it would continue at the same pace for years. Based on that assumption, they started hiring aggressively. In many cases, companies hired more people than they actually needed. Now, not for the current demand, but for the expected future growth over here. But the problem is the level of the demand was temporary over there. Now, once things normalized, growth slowed down, and suddenly companies realized that they had more employees than required. Now, previously we look at how economic trend was there during COVID. Now, let's have a look at how job trend was there. Now, if I just scroll down on this Indeed blog, now you can see over here, if you look closely at this chart, one thing becomes very clear is that company didn't just grow, they significantly over-expanded during COVID era, post-COVID era. There was a sharp surge in hiring during the post-COVID period, especially during around 21-22. Even hiring increased at the almost exponential rate at that time. This kind of spike is not sustainable in the long run, and that's exactly what led to correction, what we are seeing today. So what we are seeing today is just not layoffs. It's a correction of overhiring that happened during an unusual high growth period. Now coming back to AI, where does it actually fit into all of this? AI is definitely not a reason to lay off, but it's definitely accelerating this process. Now earlier when company used to lay off employees, they would eventually hire them to maintain their operations. But now with AI and of course automation tools, companies can handle some of their workload without even hiring new people. So AI actually reduces the need to replace employees even after layoffs. Now it increases efficiency of course, but it also reduces dependency on larger teams. So instead of saying AI is causing layoffs, a more accurate statement would be AI is making it easier for companies to operate with fewer people. Now comes the most important part of this video, like what actually you can do in this situation. Let's walk through 3 such practical and relevant actions that can help you safeguard yourself from such layoff situations. The first thing here is to understand that companies are now valuing impact more than effort. It's no longer about how busy you are, it's about how valuable your work is to the business. So you need to become more business relevant. This means understanding how your role contributes to revenue generation or cost reduction will help. If your work directly impacts business outcomes, you automatically become more valuable and harder to replace. The second thing here is to focus on efficiency. Companies are actively looking for people who can do more with less. So instead of competing based on hours work, you need to compete based on output. Learning tools like AI, automation, Excel, or any domain-specific productivity tools can significantly increase your efficiency. The goal here is not to just work harder, but to work smarter and deliver more value in less time. The third and most important thing is to move away from repetition, easily replaceable work. Tasks that are routine, predictable, and rule-based are easiest to automate and eliminate. Instead, you should move towards roles that involve decision-making, problem-solving, and strategic thinking. These are areas where human judgment still plays a critical role and are much harder to replace. At the end of the day, job security is no longer about tenure or experience alone. It's about adaptability and relevance. The people who survive and grow in this environment are the ones who continuously upgrade themselves and align their skills with what business actually needs. So to quick conclude here, layoffs are not random events. These are a reflection of deeper shift in how economy and business are functioning, and in the transition, workforce optimization becomes inevitable. But this also creates an opportunity for those who understand the shift and adapt accordingly, because in every economic change, there are people who struggle and there are people who position themselves to grow. The difference lies in how quickly you understand what's really happening and how effectively you respond to it. So I think that's it from my end. If you found this video helpful, please do give a thumbs up and share your thoughts on recent layoffs in a comment section. And don't forget to share it with others. Thank you so much for watching and see you in the next video.